Well, investors are buying, and Carlyle is waiting. The private equity giant currently sitting on $54 billion in cash. Some good dry powder there. Where is the firm looking to invest that? Carlyle Group President and COO Glenn Youngkin is with us this weekend. And Glenn, that's a big number in terms of sitting on cash. Now you've got $170 billion of AUM, but $54 billion in dry powder. What are your plans?
Well, to put the 54 into context first, it is, in an absolute basis, a lot of money.
Yeah.
We invest $17 or $18 billion a year in new investments. And we manage funds that give us up to 5 years to invest the capital. So we really have 2.5 years worth of capital to invest. And that's pretty standard for us. In fact, we're out raising new money for funds in areas of the world where we've actually invested a majority of the capital that's available to them. So the great thing about the world today is that they recognize the value of private equity, and they continue to entrust us with, from this person's humble beginnings, a lot of money.
Yeah.
And we really do appreciate it.
It's terrific. Congratulations. I was going to ask you about that. The new fundraising effort started last August, $100 billion. Where are you finding opportunities? Go through some of the sectors and ideas out there where you want to be putting that capital.
Yeah, so Maria, let me break it down into 3 buckets for us. First, the economies around the world are growing in a synchronized way for the first time in 10 years. But they're not overheating. And what that means is that finding areas where there's good wind in the sails from a revenue growth standpoint is important. And so we do find those areas in healthcare around the world and a number of technology-enabled businesses, particularly in the financial sector around the world. Some particular countries are growing a bit faster than others, like China. We think China really is growing at 6% now. And so there are spots where we do think there's really good wind in the sails. Second of all, in corporate America today, there is the inevitable reality that big companies have divisions that they don't love quite as much as others. And so they concentrate their efforts on their favorite assets, and that gives us the chance to come in and do corporate carve-outs. And one of the real benefits of being private capital is we can go into these companies. A great example is a subsidiary of DuPont that we bought a few years ago. It was called DuPont Specialty Coatings, and now it's called Axalta, and it's listed on the stock exchange. And it just wasn't a high priority for DuPont. But for us, it was a high priority.
Right.
And private ownership enabled us to invest in R&D, invest in facility expansion, and all of a sudden change the profile of that business and turn it into a growth company. So in the private setting, we can actually do these corporate carve-outs in a really interesting way. And then the third opportunity for us are in businesses that really haven't fully participated in this economic revival, and the primary example is the energy industry. Mm-hmm. It's the one place in the overall global economy where we actually see asset prices that have declined over the last few years, and that we think that creates opportunities, particularly in the United States today.
When I look at the energy space today, I'm thinking there's a lot of supply. I'm thinking the U.S. is going to start tapping into new areas. Yeah. The president, this is one of his areas of growth, energy. If we have more supply in the U.S., and if the U.S. really does become a major producer for the world, we know this is a global market, wouldn't that send oil prices lower? Wouldn't that send valuations lower? And you guys have been so invested all in on energy for a long time.
Yeah, we have. Well, we were actually pretty lucky in that we started to really amp up our investment pace right after prices reset. And what we saw going on in the world was, fortunately, what has played out was demand for oil and for natural gas continues to grow. And that is in spite of the rapid penetration of electric vehicles and all of the renewable efforts. It's just the growing global population and the increase, particularly in the emerging markets of the middle class, is increasing demand for oil about 1 million barrels a day per year.
So this is just a demand story. So do you want to own the drillers? Do you want to own the service companies? Where's the opportunity?
So the uniqueness in the United States today is the United States, if we'd been sitting here 10 years ago, was a declining industry.
Right.
We produced about 5.5 million barrels a day, and it was a declining industry. And today we're eking our way to 10 million barrels a day. Why? All right, it's technology, it's innovation, and it's figuring out how at $45 and $50 a barrel we can make money. Yeah. We can make a lot of money in this industry. We have a saying around Carlyle. We always say, every deal is a technology deal. Every deal is a technology deal.
And you know what? I think you're right.
And even the somewhat boring energy industry, which we all think of as old wooden derricks with a pipe going down
and grease everywhere.
Grease everywhere.
It's not the case.
It's not the case at all. And in fact, today, some of the leaders of the companies that we're investing in today are in this 30, 40-year-old set where they can choose to go to Google, they can choose to go work in the U.S. oil and gas industry.
Wow.